Hey, future real estate moguls. Are you suffering from analysis paralysis and having trouble getting started in real estate investing? Well, I have 4 tips and a bonus to help you get started today. I'm Dr. Brown, and I have 13 years' experience in real estate investing. And last year, my company did $953,900 in real estate. Today, we are looking at a tool to help you set a smart financial plan and make informed decisions for your financial success in real estate investing. I'm going to share my screen and we're going to get into it. So first, hit the like, share, comment, and notification bell so this information can be shared with lots of people and so that you will be notified when I upload more videos. So I'm going to share my screen with you and we're going to look at this tool. All right, so first off, I wanted to look at 3 reasons to start investing in real estate. So the first one is passive income. Over time, you can secure your future income with earnings from real estate through rental income. It's always necessary. People will always buy houses and rent homes. Real estate will stay in demand no matter what. There's many ways to make a profit. Rental income from buy and holds. You can fix and flip properties. You can wholesale properties. You can house hack. You can decorate. You can stage. These are only a few ways you can earn money, but there are lots of ways to make a profit in real estate. So the tool we're going to look at today is what I call the secret sauce for every project. So we're going to look at some SMART goals that can help you get started today with your financial planning for real estate so that you will be successful with every project. So the first thing you want to do is be specific and tell us your why, your objective. I want this goal because why are you buying this real estate property? Is it for a buy and hold for rental income? Is it for a fix or flip for a quick return on your money? Is it for wholesaling a project where you're going to get the transaction fee? Or do you want a house hack, which means that you're going to make this your primary residence for a year and 1 day so that you can later rent out the property? Or if you're buying a duplex, triplex, or a fourplex, then you can rent out the other units while you're living in one for that year and 1 day. So why are you buying this property? So the next thing you need to look at is your goal measurable? So this week, my goal is to, what are you going to do? Are you going to do market research, which means that you're going to look at the trends that are going on in the market right now? Are you going to check out locations to see if the property that you're looking at has the amenities? It's going to be a win-win for you and the tenant. Are you going to put financing in place, which means are you going to self-finance? Are you going to go to a bank? Are you going to go to a private lender? Do you have a group of people who will finance the deal with you? So what kind of financing are you going to put in place? So then you're going to look at, is this attainable and realistic? So you're going to look at the roadblocks. Are the strengths, the weaknesses, the opportunities, and threats? So what are some of the roadblocks? Do you have the skills to do this project? Do you have the money, or do you have someone who can trade money for your skills? Do you have the time to do this? Are you going to be able to do this project in a reasonable amount of time? Because time is of the essence, especially if you have a construction loan, because they want to know what kind of progress are you making on this property, and will you be able to pay it back in a reasonable amount of time or refinance? And then last, you're going to look at the time. Do you have the time to do this, or do you have the money to hire someone with the skills to do this project for you in a timely manner? So I will work on this goal or have someone else work on this goal. What is the schedule for that? What is the day? What are the days? What's the time that's going to be put into this project? And then last but not least, you don't have to be great to get started, but you must start to be great. And that is a quote from Zig Ziglar. So this is a resource that you can use for every project in order to have a financial plan in place to get started with your project. And these are what we call SMART goals, which are specific, measurable, attainable, realistic, and the time that you're going to put into this project. So those SMART goals are going to help you make informed decisions, and it's also going to make sure that your projects are within your financial goals. So I'm going to stop sharing this, and I will list this in the comments below so that you will have this tool to print out so that you can use it for each and every project that you have or that you're working on. So I'm going to stop sharing this. And the bonus that I have for you all is to look at the risk and rewards for SFR real estate investing. So let's look at that. So we're going to look at my screen. I'm going to share my screen. And we have setting goals, financial goals, risk and rewards. And as you can see, we have our SMART goals over here: specific, measurable, achievable, realistic, and time-based. So the first risk, there are 4, is market volatility. So the risk is real estate markets can be subject to economic fluctuations affecting property values and rental income. So you want to diversify your investments and stay informed about local and national economic trends. So this is where the market research is helping you to figure out what the market volatility is going to be and help you make a more informed decision about investing. The second risk is interest rate changes. Rise in interest rates can increase mortgage costs, impacting profitability. Because if your interest rates go up, your mortgage costs go up and your profits go down. So you want to monitor interest rate trends and consider fixed rate mortgages to lock in rates. That's the smartest way to go, is to have a fixed rate mortgage so your rate is not going up and down, and your mortgage payment. The third risk is property management challenges. So managing single-family properties can be time-consuming, especially dealing with tenant issues. And that's where the property management piece comes in. They will help you to deal with any kind of tenant issues going on, whether it's collecting rent or some sort of work order or a financial report that you need as far as how much money is coming in and what's going out for repairs. This property management will really help you to run a smoother company because you are going to be able to focus on other things besides tenant issues. So you want to consider professional property management services to handle day-to-day operations. So they will handle those day-to-day operations, and it can either be a company or it can be software that you set up that will handle all of your tenant issues. And the last risk that we're going to talk about today is market saturation. If the market is oversaturated with rental properties, it may lead to increased competition and lower rental yields. So you want to make sure that you're in a space where there's over demand and little supply, because if you're in a place where there's oversupply and little demand, then your rental yields are going to be lower. So you want to homes often attract stable, long-term tenants, providing a consistent rental income. So you want to make sure when you are purchasing a real estate property that you are investing in the community and not just the house, because you want this to be a win-win situation for you and your tenant, which makes the tenant want to stay long term. So you want to choose properties in high demand areas to maximize rental potential. And you also want to make sure that that area has amenities such as grocery stores, good schools, low crime rate, parks, libraries, shopping malls, things that are going to make the area convenient for the tenant as well. The next reward that we're going to look at is potential for appreciation. So real estate values may appreciate over time, contributing to long-term wealth. And real estate is one of the fastest growing assets that appreciate with compound appreciation, which means that it appreciates at a much greater rate than any other asset class. So you want to select properties in areas with positive economic growth and development prospects. So you want to make sure that the area has job opportunities and also additional future project development. So you want to make sure that this area is up and coming and growing and not stagnant or everyone's moving out of it, because you want to make sure that your appreciation is going up instead of down. So the next reward is portfolio diversification. So SFR Real Estate provides diversification, spreading risk across different asset classes. And there are a lot of asset classes when we're dealing with real estate. The one that we're talking about today is SFR Real Estate. So in another video, we will break down the different asset classes and what they entail. So you want to combine SFR investments with other real estate types or investment vehicles for a well-rounded portfolio. So not only do you want to invest in single family residence, but you might want to invest in commercial. You might want to invest in real estate stocks. You might want to invest in land. There are many different asset classes that you can actually invest in to diversify your portfolio. And the last reward is tax benefits. Real estate investors can benefit from tax advantages, including deductions for mortgage interest, property taxes, and depreciation. You want to consult with a tax professional to maximize your tax benefits. So you need to make sure your tax professional specializes in real estate so that you get all of the advantages, the tax advantages that are coming to you. You want to get the biggest bang for your buck. So make sure your tax professional specializes in real estate and is not just a professional tax person. And in summary, it's important for investors to conduct thorough market research, understand the local economic conditions, and carefully assess the specific risk and rewards associated with SFR properties based on your financial goals. So you want to make sure that you are looking at the risk and rewards that are going to best benefit you and your financial goals. Additionally, considering factors such as location, property condition, and tenant demand can contribute to successful SFR real estate investing. So make sure that you are investing in the community and not just the house. So thank you for joining me today. I'm Dr. Brown, and I do have a course on udemy.com entitled Essentials for Real Estate Investing Strategies Made Easy, and I will include that in the first comment so that you can click on it and easily get to the site. So I'm going to stop sharing. And if you have not already, please like, share, comment, and hit the notification bell so that you're notified every time I upload a video, and so that a lot of other people can watch the content. All right, so I hope you took lots of notes, and I will see you on the next video. Goodbye.